Welcome to the Stock Market Daily News Podcast. It's Wednesday, November 20th, 2025, and we're bringing you everything you need to know from Tuesday's session. Wall Street faced more turbulence. The S&P 500 slipped, the Dow Jones dipped, and the Nasdaq continued its slide as tech giants lost steam. But beneath the volatility, today's market was packed with dramatic stories, from big banks' valuations to talk of an AI investing bubble. So let's get you up to speed on the biggest market moves and what they mean for your portfolio. First up, Alphabet, Google's parent company, grabbed headlines as Warren Buffett's Berkshire Hathaway revealed a surprise $4.3 billion stake last quarter. Alphabet stock jumped nearly 40% last quarter and has continued to climb, closing above $285. Veteran investor Tom Russo says it's still trading at a below-market price-to-earnings ratio and calls it a remarkably solid business. But Russo, like others, warns that Alphabet's heavy AI investments, expected to top $90 billion next year, must deliver real returns to justify the run-up. The takeaway? Alphabet remains a heavyweight, but investor patience is being tested as AI spending soars. Speaking of AI, the bubble debate is front and center. DeepMind co-founder Demis Hassabis told the Hard Fork podcast that certain corners of the AI market are probably in a bubble, pointing to billion-dollar seed rounds and sky-high startups with little to show in profits. Alphabet CEO Sundar Pichai echoed the caution, warning that even tech giants like Google aren't immune to a pullback. Some investors, like Michael Burry and Peter Thiel, are already betting against high-flying names like Nvidia and Palantir. The dot-com era is on a lot of minds. If a shakeout comes, experts say leaders like Alphabet are positioned to emerge even stronger, but excesses could see billions wiped off frothy valuations. Switching gears to the banking sector, public sector banks, or PSUs, remain in the spotlight. Analyst Rahul Arora notes that State Bank of India and Bank of Baroda, despite recent rallies, still trade at hefty discounts compared to private peers. With SBI's return on equity near 14%, Arora argues PSUs could see further gains of 15 to 20% if foreign money flows back into Indian equities. Meanwhile, private banks face slower growth due to massive balance sheets, making selectivity essential for investors eyeing financial names. Turning to IPO fever in India, recent listings like Grow and PhysicsWallah continue to surge. Grow crossed the 1 lakh crore rupee mark in market capitalization and returned over 90% since listing, but experts like Narendra Solanki caution that valuations are running well ahead of fundamentals. Both Grow and PhysicsWallah are supported by long-term sector growth, but Solanki warns that short-term traders should be wary. These plays suit patient investors as India's digital finance and education markets mature. In energy, Constellation Energy shares rose after a deal with the Department of Energy involving the shuttered 3 Mile Island nuclear plant. The agreement signals ongoing government support for nuclear power as part of a cleaner energy transition, and investors are eyeing further upside for key players in the sector. Rounding out with a quick consumer highlight, TJX Companies, owner of TJ Maxx, topped earnings forecasts, a sign more Americans are tightening belts and flocking to off-price retailers. Discount chains continue to outperform as shoppers seek value over premium brands, a trend worth watching as economic pressures mount. Recapping the numbers, the S&P 500 and Nasdaq closed lower, while the Dow also dipped. Key themes driving markets include AI-driven volatility, debates over valuations in tech and banking, and a retail sector tilt toward value shopping. Looking ahead, watch for more earnings, continued AI sector shakeout, and international capital flows, plus the Federal Reserve's next move as markets search for direction. Thanks for listening to Stock Market Daily News. Be sure to subscribe for tomorrow's 2-minute recap of everything moving markets. For more updates, visit our website and follow us on your favorite podcast app. See you next time.